Do you have some thoughts about this? I mean, everybody's expecting a cut, but does it matter to you, or do you think it matters to other investors if it's 25 basis points or 50?
I think it's much more likely that we're going to see a 25 basis point cut. I don't think it matters too much either way. I think 25 is the most likely scenario. As long as we're getting a cut and we're moving in that direction that'll be more supportive and seeing a more accommodative Fed, I think the market's going to react in a positive way.
I think there's another question with the market. The J. Powell press conference that comes up tomorrow after some of the recent developments. Lisa Cook staying on the board, Stephen Myron being added, will participate in this meeting. Do you think investors, whether it's bond investors or equity investors, are going to pay especially close attention to that press conference? And is there any kind of, I guess, possible impact about questions of Fed independence? It's kind of hard to really ask the question because we don't know what Stephen Myron's going to say or do. We don't know if he's going to dissent. We don't know what's going to happen.
There are a lot of question marks right now. There's no question about that. But we will get a cut. That's basically a foregone conclusion. But I do think kind of seeing what the dot plot shows, what more of that future rate path might look like, and what all of this having him there, what that looks like, what the commentary is. I do think there'll be a lot more focus on that, almost more than the actual rate cut at this point.
How are you digesting this recent surge when it comes to tech? A lot of it's based on Oracle last week. There's some questions about the fact that a lot of their guidance was related to one customer, OpenAI, a private company. And then we're seeing Oracle surge again today on the idea that they're going to be one of the companies, part of what reportedly is going to be a consortium of companies that enables TikTok's operations here in the U.S. What do you make of this just big surge and the fact that there's so much concentration when it comes to tech already, and it seems like investors are just going back in there?
This whole AI tailwind that we've seen, this theme is continuing, and it's just what we saw last week with Oracle has just added more fuel to the fire and just provided more support for that. So I do expect that that's going to continue. And having this concentration, I mean, mega cap tech certainly is making up, more than a third of the S&P right now. That's likely going to continue, but there are a lot of reasons why that's not necessarily such a concern or so unreasonable. I mean, these companies have fortress balance sheets. They are driving the market. They're contributing more to earnings than anyone else, and the cash flows are tremendous, and the investments they're making are huge. So there are a lot of reasons why it can continue. But
isn't the move a bit counterintuitive? If we're going into a rate cutting cycle, wouldn't that make sense for the money to kind of broaden out and the idea that cyclical sectors, financials, small caps, maybe even materials? We're expecting so much CapEx investment here in the U.S. after the Trump tax and spending bill. Even materials, does it seem odd that the market's actually narrowing going into a rate cut?
A little bit. I mean, we have seen kind of over the last 6 or 8 weeks, as there's been more of a acceptance that we're coming into a rate cut, we've seen that broadening out happen. And just in the last week, basically following the Oracle news, we've seen it reverse a little bit. But I do expect that will continue, and we will see more broadening out. Having a more accommodative Fed could lead to more business confidence. We'll see more opportunities for other parts of the market to do well. And especially, we do think small caps have an opportunity to pick up some of that underperformance we've seen recently.
When you're making investment decisions, are you worried about frothiness at all? Outside of tech's, just continues to surge. But one other trade that we're going to talk about just a bit later in the show is uranium and also nuclear stocks. Do you think that's a sign of froth? We're going to show really the moves yesterday. Big jump yesterday after the U.S. announced it's going to build up its uranium reserves. Also, the president headed to the U.K. today to talk about a nuclear deal with the U.K. Concerned at all that if it's quantum computing, if it's robotics, if it's AI, that the market's just getting a bit frothy?
It's worth watching valuations, but again, just where we are, there's so much momentum right now. We wouldn't be surprised to see some volatility going forward around various news, but we do think that there's more room to run.
Right. Would you put money in uranium stocks, nuclear stocks today?
Having a small allocation there, I don't know that I'd put more money in where we are today, but definitely want to maintain the risk exposure.